Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything that you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Another busy show. They're all going to be busy shows as long as this volatility continues to linger in this market. We were in a correction, textbook correction yesterday for a minute. Then we rallied, so we're not, but we're almost there. So a lot of weird things happening in this market and a lot of movers to discuss. Obviously, today is a big earnings day as well. We had Mondelez after the bell. We had just this morning GE, Coke, Pfizer, Tapestry. We have Facebook after the bell, FireEye, Amgen. So a lot of earnings stocks and a lot of movers and just general trying to get a sense of this market. So we'll try to do the best we can on our show today. Our guest is Sean Udall. He will join the show at 8:35 to give us his thoughts here. Joel, we're looking at the S&Ps here, and where are we at?
We got green on the screen, up 16 handles here at 26.59.50. Nice range overnight. Your pre-market low, 26.36 and a quarter. That was just under your last after hours print at 39.50, coming back on the upside. Really only one number that comes into play early, and that's Friday's close of 69.50. I just want to note that we had a 104-point range yesterday. That has to be the biggest range that we've had. I don't know. You were looking at it in years, Spencer. So those kind of ranges and that kind of volatility, still not a good sign for the market. We'll see if we can find some footing here today with perhaps an inside day. Things calm down a little bit. Crude down 55 cents here at 66.49, still hovering above that major support level. I'll give you that major support level for you folks, and that's right at $66. Here's some lows going back to the 23rd. 65.74, 66.05, 65.99, 66.20, 66.29. So no more downside for crude until we crack that $66 level. Gold in the red by $4 here at $1223.60. Just kind of leaking off that 1246 high that we had. That was back on last Friday. The top of the trading range, which we broke out from, was 1220. So we will use that as support. We're a few dollars away from that. Silver never really seemed to catch a bid when that gold rallied. That just has a wall at 1480 coming back. That has a pair of lows at 1425 area if you're looking for support. Bitcoin up $15 here at 62.60, just hovering over that $6,000 level. I was talking about it with a buddy of mine, and he just feels there's just a real patient seller out there. Maybe
one seller,
or that Mount Gox. They
right.
had I don't know how much Bitcoin they have to get rid of here, but just keeping a lid at it, not really smashing it, not really letting it go up, but keeping an eye on 6,000 if you are still interested in Bitcoin.
All right, so Dennis is here, and he's around this morning. He'll be on probably in a couple minutes. But in the meantime, let's just start with the earnings, and we got to start with GE, which was probably the biggest report of this morning and being discussed here in our chat. So I'll bring up those numbers here, and I'll pull up the chart here of GE. The Q3 adjusted EPS, 14 cents versus a 22-cent estimate, which we expected they would have missed. That's what happened. Sales, $29.5 versus $29.85 million. So a miss on both the EPS and sales for the Q3. Also cutting their quarterly dividend from 12 cents a share to 1 cent a share. I'd buy that dividend for a penny, Joel.
A penny. That's Dennis's take there on it. Oh boy, flat at 11.16. Now, by keeping that 1 penny dividend, this allows the dividend investors to stay in it. I don't know what that penny dividend is worth here, but I would definitely take note. That's the reason why they did it. You cut through the low of the move, the multi-year low at 11 and change here. It was 11.21. It was 3 lows in that area. You took that out yesterday and that market soft, took it down to 10.83. So I'll use 10.83 here as a target on the short. It just looked like the bulls and the bears are just really battling here at $11. I've seen we've been green a little bit. We've been red a little bit, but is all the bad news out in the stock? That's what you want to know? I mean, they took that right down, that I think we talked about that on the show with Mr. Inch. I don't know. Is there any more write-downs? Is there any more bad news that's out there? I guess for if you want to be an investor.
Well, they can't have fired the CEO, so
if they do that, that was another great point that John Inch made when we had him on the show last week. You know, you bring someone in for like 3 or 4 months, and the board hires the guy, right? So you want to have confidence in your board, and then that board lets them go, and then they bring in someone from that board. So I don't know. It's not enough for me to get interested in the stock long term. Down 6 cents, 1.5 million shares have traded. 10.83 on the downside. That's your target. On the upside, if you're thinking of perhaps trying this from the long side, I would at least like to see it, hold the close. And that close was 11.16. I think that's one of the lowest closes. That might be the lowest close you've seen that since the financial crisis. So GE, not a pretty looking chart. Daily, weekly, monthlies, whatever you want to look at.
But isn't the fact that it's held 11 this morning, doesn't that do something for your confidence a little bit? In terms of the dividend cut, obviously in this case, if this tape is to be believed, already priced in by the market, the bad news is already out there. We know it.
I mean, I guess it's like if everyone's out, that's out, that's want to be out of the thing, big institutions and, big hedge funds or whatever. But I mean, it's just not getting the lift. It's hanging around unchanged. So I don't know how you're not even buying it for the dividend for that penny dividend.
Nope. You're buying it for the future, I guess. All right. Let's move on to another one here. We'll go to one of our big gainers in the morning. That is Under Armour, not a stock you usually think of as having good earnings, but here we are. Q3 EPS 25 cents versus a 13-cent estimate. Sales of 1.44 versus 1.41 billion dollars are raising their guidance for the fiscal year. The EPS guidance was raised by 3 cents to 16 to 19 cents for the fiscal year EPS. They see their fiscal year sales up 3 to 4%.
Let's see. Trading up $1.92 at 2011. That's just off the high of the pre-market session. 2035 marks the high of that session. This stock just looked itchy. I mean, it had 4, 5, 6 highs right at this 1870 area. You took it out yesterday, but closed under it. Now you're getting a nice lift up nearly 11%. $20. We'll keep an eye on that. You had a high at 1995. That was on October 9th. You had another high at 1994. So momentum traders, breakout traders, you really want to see this thing hold $20. I don't see much between 20 and 21. The next daily high that you have above 20 is 20.61. That was on October 4th. So, you want to play this close to the belt if it can't hold 20.
This is one I actually thought about buying a year ago. I never got around to it, and I'm glad I didn't. But actually, that happens with me with a lot of stocks. I think about buying it, I don't actually buy it, and I guess this one worked out for me. But still on my radar for.
Yeah, and also think about what's coming up this time of the year, right?
Holiday season.
Yeah,
but you would think that trade is.
I mean, they're going to be looking to buy something going into the holiday season here, but
I suppose.
Yeah, but trading at 2015, trading at the highs of the pre-market session, not looking like it wants to give anything back right now.
All right, here's another one this morning. Pfizer, they are not looking to buy this morning. Pfizer Q3 EPS 78 cents is a 3-cent beat on the estimate. Sales 13.29 versus $13.55 billion. So it's like beat on the EPS and a miss on the sales, and they reaffirmed their guidance for the fiscal year of an EPS guidance of around $3.
Stock has had a very, very nice run and a pretty rough tape. Starting to give a little back this month as profits are coming out of the issue here. Your pre-market low stands at 41.60. Your 3-day low comes in at 41.66. You're only 16 cents away from that. I'd really like to see it hold 41.60. If you get through that, I mean, you had several lows in the lower 41 handle. Let's just call it 41.25. That would be our next target if 41.60 fails. This is a big move for Pfizer, $1.48 coming back on the upside. Fill the gap from yesterday's action. And by the gap, I mean the low from yesterday. That comes in at 42.56. Just keep in mind, just a few months ago, the stock was at under $35. That was your June low. Hit a high of 45.81 earlier in this month. Very, very big move for Pfizer. Maybe subject to some more profit taking today.
And here's a great report sticking in the sector from Allergan. Q3 EPS of $4.25 versus a $4.02 estimate. Sales of $3.9 versus $3.86 billion, and the guidance raised to boot. Fiscal year adjusted sales guidance raised from 15.45 to 15.55 billion dollars. So those are all good numbers across the board for Allergan.
And they can only muster being up 80 cents here. Not a great sign with all that good news here. Trading above the close. The close came in for you at 173.80. Yesterday's low down at 172.01. That was a fresh low of the move here. I don't know. I just don't like that it's just not getting a big rocket on this one. So if it goes red, I'd be afraid here. Not much in there until 172.01. And then you go to the monthlies here after 172.01. This is just a monthly low, so there could be some intermediate levels in between. But your July low was at 163.36. So good report, but not really getting much of a reaction in Allergan.
Let's go to one that is being brought up in the chat here. Mastercard reporting here this morning at around 8 o'clock. Q3 adjusted EPS $1.78 versus $1.68 estimate. Sales 3.9 versus 3.86 billion dollars. So beats on the top and the bottom line for Mastercard. Stock is getting a pop on that.
Yeah, up $4 here at 195.04. It's a nice 2% move. Rough day yesterday for it. Lost near over $6. Man, there's hard to forgive you resistance in here. I see a pair of highs at 202.34, 202.41, but that would have to be up another $8 from here. So I don't really seeing that come into play. Most likely, if you're looking for another target on the upside, 197.49. That was your low on Friday, and that was your lowest close from earlier in the month. So 197.49 a target in Mastercard. Coming back on the downside, man. If this thing starts to roll over, the close is not down to 191.04. Also, keep in mind the stock made an all-time high at 225.35 at the beginning of the month. So if, in fact, we do go into super full-blown rally mode here, there's going to be a lot of people looking to exit this stock on a rally.
All right, got to go back to GE here for a second because the call is going on right now, and they said on the call that the SEC expanded a probe to include an investigation into a $22.8 billion goodwill charge by GE. And if you look at the past few minutes here, you can see.
Spencer, did I ask you if all the bad news was out on GE?
Yeah, I guess we were wrong. We were wrong. There is more. It's never ending.
SEC investigation, not a good thing. Now under $11, down 23 cents at 10.93. Your low from yesterday. Let's see what low from yesterday in GE came in. Low from yesterday comes in at 10.83. So there's your target. Boy, oh boy. I mean, Dennis was calling for $10 on this one for a long time. I don't know if today's the day we actually see $10, but rolling over here, not good things. I'm sorry. Yesterday's low was 10.93, and that's currently we're trading under. So now you got to look at that close is even going to be more resistance for GE. Now we are taking out yesterday's low here just by a few pennies here. So GE, and let's go back here. We need to go back to, this is bad when you have to do this on a chart. Back in July of 2009.
God.
We all know what was going on then. This had a low of 1050. So another potential target here for GE. We'll see what, if we get to check in with Dennis, see what the imbalances are here. But 1085 print here, heading for that 1050. Will this be the day that GE goes into single digits, Brentster? Single digits possibly for GE today.
All right, I want to pause on the earnings for a second from a quick headline from the video game space. TTWO getting a huge pop this morning. They had a big game launch over the weekend. If you're at all passively familiar with the video gaming, you know that the Red Dead Redemption 2 has been arguably the biggest, the most anticipated release of the year. It was out on Friday, and their first reports are that that game, Red Dead Redemption 2, achieved over $725 million in worldwide sales in its first 3 days. Wow. And look at that stock.
It's blasting off here. We just ticked 126 even. That's up $14.28 here, nearly 13%. Two comments on this one. I mean, compared to EA and what's the other one?
Activision Blizzard.
Activision Blizzard. This one is held up extremely well here. I mean, it has pulled off its all-time high. But not nearly like the EA or Activision Blizzard. We just made a spike high here in the pre-market trading at 126 even. We're currently trading at 124.5. That's up over $12. I just see this high sticking out at 124.98. That's your 3-day high. Soft target there. I'm sure if you were looking at this thing closed yesterday at 111.26, you're pretty happy that it's over 125. So I'll use that as a swing level, continuing to buy this. One next daily high that comes in there, 128.90. Another potential target here. I don't know if it has enough gumption to get there today. And let's just do a quick math here. Let's call the high for the move, all-time high. Let's call it 140. You had to move down to, let's call it 110. Let's make it easy. So 125, that's also your 50% retracement of this nasty decline. So that's the number I'm sticking with today. I like it above 125, below 125, room on the downside.
All right, we'll go back to the earnings. Here's an interesting one that I want to look at. Akamai Technologies, AKAM, got the pop yesterday in the pre-market and in the morning on the news of the IBM Red Hat deal. Gave it back throughout the day, closed in the red, I believe, and then getting a huge pop today now off its earnings report from after the close. So the Q3 EPS there, 94 cents versus an 83-cent estimate, sales of $670 versus $664 million. So beats on both, and a $1.1 billion buyback plan was announced.
All right. Well, this one, a very nice report. This is you're definitely your clear leader here. In the tech sector. They love those numbers, trading up $6.91, just right at the highs of the pre-market session. So no one is attempting here to step in and sell this thing yet. I do see, let's see what we got here on the dailies. 68.85. That's the low that's the high we're challenging now. That was from October 4th. And let's just go to your other numbers. 70.26 was your high on the 3rd, and then 71.33. So maybe 70, 71 targets in this one. Let's do a quick 50% retracement here. We went from 77, let's call it 61, 16, $8, $69. Boom. That's halfway back. So let's see. 69 is the bogey here on this one. You start to go into retreat. Got a long ways to go to fill that gap from yesterday. That comes in at 63.94. So AKM getting the lift here.
Lumber Liquidators, LL is not getting the beats this morning. So Q3 just EPS 27 cents versus an 18-cent estimate. So yeah, so 27 cents versus 18 cents on the EPS. That's good. The sales missed 270 versus 281 million. That's not good. Comp store sales growth for the year at around 3%, 2.5 to 3.5% was the range they gave. EPS beat, sales miss, and we've been watching that sales number, and it matters.
Now, is this a big surprise on this one, Spencer? Since what other sectors have we been talking about that's been weak and uses a lot of lumber?
The home builders.
Yeah, exactly. Following the home builders down here on just a spiraling chart. I can't believe this got back over $40 last year. It got up to $41.33, down to 11 in the pre-market. That's down 17%. Just sitting here, pre-market low comes in at 10.22, sitting right there at 10.22. Let's go back to, let's see here, $10. That's where we got to in February of 2016, and trying to see if that was the low of the move. I think so. So, big windfall for shorts here. 10.22, just sitting on that multi-year low here. Under $10. There might be some institutional bids here, but they recovered from the Whitney Tilson. It was his big short, right? Recovered, yep. And then just right back down with the home builders here. So Lumber Liquidators looking to test a multi-year low.
And you wouldn't think of that being, I guess I wouldn't think of that as being an interest rate sensitive stock right off the bat, but I guess
if it's linked to the housing sector, I think so.
All right, Joel, let's do a quick checkup on the S&Ps. What are we doing here?
We're still in the green here by 12 handles. It's almost 13 handles at 26, 56, 75. Calm it down a little bit. We just had a little run up here to 26.61. Your closing mid-range on the day is 26.50 and a quarter. Your close is down at 26.43.50. But really, after a day like yesterday, I think Dennis alludes to this a lot. When you rip through levels like you did yesterday and the last couple of days, it's just kind of like wherever the big orders are going to take you, that's where the market's going to go. So let's see. I mean, we're hoping for an inside day here, holding 26.03 on the downside.
What would an inside day tell you?
Just things are calming down a little bit. Buyers, I thought on that decline that we had yesterday, I thought buyers would step up a little bit quicker than they did. That rally that we had off the low was just a snap back, overreaction rally. You want to, it wasn't like the rallies that we were having early year and like slow and steady here. So just wait for that 9. I mean, I know everyone here likes to follow the VIX, and I don't follow it as much as I do as like the average daily ranges. And the SPOO's 9-day average daily range getting up to 60.5, which correlates right into the VIX. It's not what the bulls. It's not a recipe for a bull market.
All right, I want to look at one stock, an earnings stock. I don't know if the numbers are out yet, but it is trading down on a little today, and that's Fiat Chrysler FCAU. I haven't seen the numbers yet. I've been looking around. I haven't been able to track them down if they're out. I don't think they're out, but it is getting hit this morning, either ahead of or after the report if they are out.
All right, 1561. That's down 40 cents. This just had a very, very mysterious rally in 2017. While the other autos were, they had some. GM had a rally. Ford certainly did it. Started to give it back at the beginning of the year, was holding in there, and then the unfortunate passing of Sergio Marchiani spooked shareholders as well. We are down 40 cents here at 1561. Area of interest for me is right here, 1543. That was a low that you had in September. 15.19, very important level. That was the low from yesterday. You held 15 in, like I said, September. Under this $15 area, things get kind of scary because in the month of August, the stock had a low of 11.54, closed at 15.13. The next month, it closed at 17.91. What that's telling me is there's a lot of air here between $15 and 11.5 here. So we'll see how Fiat Chrysler reacts at this $15 level.
What about the metals here? Arconic reporting an EPS and a sales beat for the Q3, 32 cents versus 30 cents and 3.5 or $3.49 billion. Fiscal year EPS in line with estimates, ARNC.
Bad day yesterday, trading in the green by 53 cents here. What do we got here for this issue? Keep it 1984. 1984 was your close on Friday.
Good year.
Yeah. 1998. I call it 20 here. Get through 20, hold 20. I think this thing has a chance to rally. You got three highs between 1998 and 2012. So you have sellers stepping up here. And then what's the one that was getting some rumors? Was that Alcoa?
Alcoa rumors? I didn't.
Or what? Was it there? Arconic? Was it there?
It could have been Arconic.
Yeah.
It was Arconic. It was Arconic.
Who do we have here? Triple D.
Snuck in. I'm sneaky today. I'm sneaky.
Yeah.
One of those sneaky days. I snuck in the background.
Yeah. How we doing?
I was ready to come on the show at 8, and I did the worst lag ever. I had, you know how I deal with my arbitrage stuff, and I was saying to you on the pre-market show, I'm like, I don't know what's up. I don't know what is trading really, for the tech stocks. I'm seeing a lot of tech stocks trading in the red or barely up, like Amazon still trading in the red here. And I'm like, I think this is going to start giving her back. So I lagged out of some of my stocks and kept on a big Q short, and then it just rallied like 50 cents in my face. It came back in here, so that's why I'm back. I was able to get back out of the lag, but it was ugly there for about a minute or for a few minutes there. But I mean, I'm just looking at this market here, Joel, and let's just talk the overall market. I know you guys would have talked it off the hop,
sure,
but let's just talk a few more minutes here because, the carnage we saw yesterday was significant. A lot of your leaders falling off. And even though you're seeing, a little bounce here this morning, I'm not seeing real big follow through in the big beta names, the high beta names there. I'm actually seeing, like Amazon, I just said, is trading down 11 more points here this morning. I know it was a little wicked on the close and kind of chopped around, but still, on a day where you're trading up, and you look at the Qs trading up 0.8%, you think Amazon would be higher, and that is not the case here right now. If you look, Microsoft is up, Apple is up, but they're nothing really like, whoa, look, what's really leading the charge. I know you guys said Akamai, and we talked that earnings earlier, and that helps a bit. But of your, major leaders, and if you just go look, what you can do, is just go into the QQQ, look at the components, and break it down. Let's just see, what's happening inside. Sometimes it's better to lift the hood and take a look inside as opposed to just taking the rally at face value. And you can see, Apple's 13% of the Qs. Well, it's up 0.45%, so it's going to lag on the overall Qs right now because Qs are up 0.8. Microsoft, okay, well, it's the next component at almost 11%. It's about the same as the market. But then Amazon, which is 10% component, is another 0.8% lag on the Qs. So that doesn't help there. Then if you go into Google, well, Google's only up 0.39%. So that's a lag on the Q. So we just went through the top four components, which make up almost 40% of the index, and none of them are up as much as the Qs. So that's an issue right away. Facebook, now we're on the fifth component. It's only up 0.29% of the Qs, or it's only up 0.29% compared to the Qs. Now we went through the top five components. And actually the other component is the second part of Google, which is GOOGL. Well, we know that's not up as much. So now we're through six top components, over 50% of the index, and we can't find one that is up as much as the Qs here right now. So now we go to Intel. Okay, well, it's up as much as the Qs. Cisco's not quite up as much. I'm just looking, at the pre-market trading here and taking, the numbers, kind of at face value. But that's telling me when I lift the hood, I don't see a big rally here. So that's also telling me that the Qs might come in a little bit more, or, these other stocks have to pick up the slack. But when you got 55% of the index not trading, that means all those other, okay, so there's 90 other components and they're smaller. All of those are going to have to make up the difference. And sometimes they can. You can see a defensive market. And I know Kraft Heinz is in there. I've talked about before. Costco's, and there's a few others in there. But overall here, like, what are your thoughts when you look at, like, I know when you break down the S&Ps, Joel, you often just look at those top 10 components, and that's a pretty good indicator for the overall market. So when I lift the hood here on this Q's rally, I don't see a lot there.
Yeah. No, I'll just echo that. I mean, it was a big sell-off yesterday, and mentioned got near that 10% area, 10% correction, came screaming back. From my vantage point, by looking at the S&Ps here, you got your Berkshire, you got your financials. It's a little bit more. A little bit more of a well-rounded rally here. You have,
but they're not up much really. So S&Ps are up 0.5. You got Citigroup up 0.6. You got Bank of America up 0.6. I mean, they're not really jumping out saying, "Whoa, these are the big leaders." So I don't know. When I look at it that way, it just seems like I think this market's going to give back these gains, and I think we're going to end up in the red here yet.
Okay. Well, you always trade. You try and trade, with like a even keel, and not super biased here. So I want you to try and keep that hat on. I know you trade delta neutral a lot, so don't get away from your game plan here, Dennis. I mean, I know you have one. And
yeah, I trade market neutral.
Right.
Again, your options confused with your. But anyways,
because that this thing. I mean, you may be right, but when you take those shots off the open, how much this thing can move. Like, look like if you had to save a point yesterday.
I mean, we could turn around. Amazon could rally 25 points right now, and then everything would change. But I'm just saying, when I look at Amazon down 1% more, and you saw it fall 120 points yesterday, nobody's even willing to buy that sell-off, really. I mean, yeah, we bounced from the lows in the last 15 minutes yesterday, but there's no buy the dippers coming in here. Yeah. Not really. That's concerned. Amazon was definitely your leader on the downside. Yes, I mean, it lost 120 points. So you look at that for leadership here today, and it's not being a leader here again.
What are you worried about?
Let's bring Sean in. Let's get Sean in this conversation.
2,400. Is it though? That's your price. Is your price target 3,000 in Amazon, Dennis? I can't remember.
I don't have any long-term price targets, and no, I don't like the high PE. The high PE stuff is the stuff getting sold, and that's what we're seeing here again a little bit this morning. Despite an overall rally here in the market this morning, we're still seeing the high PE stuff lag. That's concerning. So that's all I'm saying is, I always try to, look and, let's see what's happening. Let's, and what I'm seeing here this morning, when I really look at the components, I don't see a big, strong rally here this morning. So that's why I'm skeptical of this early morning bounce. Let's go grab Sean.
All right. I'm going to call Sean on the hopper.
Grab Sean. I'm going to be back in 3 minutes.
Let's see if Sean answers.
Okay.
Let's see if Sean answers on the hopper. Sean Udall is here calling. He is the CIO of Quantum Trading Strategies. Sean, are you with us?
Good morning, Benzinga.
That's a yes.
We are live here with Sean Udall, a frequent guest here on Benzinga's Pre-Market Prep Show. He's the CIO of Quantum Trading Strategies. Sean, how you doing out there?
I'm good because I really, really loved yesterday's action.
Tell us why you loved yesterday's action.
Because yesterday we saw, and we have been seeing this, but yesterday we probably saw the absolute strongest rotation type action that I've seen since spring of this year.
And is that a good thing or is that a bad thing?
I think it's a very good thing. I mean, if you if you want this market to ever go notably higher again, it's a very good thing. And my whole thesis this year, and in fact, we've kind of nailed this year. And by that I mean there are very few people that I've talked to or been interviewed by that have said this whole year we could basically be stuck in the trading range. And you and I and Dennis, I think, have said that almost every time I've been on your show this year. But at the same time, my structural issue for the whole year has been we have a FANG bubble and we have a cloud bubble and maybe a couple other little weird bubbles so we have incredibly thin market leadership with stocks that are incredibly overvalued that are leading the market that don't really deserve to be leading the market anymore. And so finally, what's happened the last 2, 3, 4 weeks is you finally have kind of a decimation of the FANG trade and to a lesser degree, the cloud bubble trade. There's a lot of cloud stocks still trading exceedingly rich. But what's finally starting to happen is companies that are like Intel had a good report, pretty much been up since their report. PayPal had a great report, pretty much been up since their report. Twitter had a good report. I wouldn't call Twitter's report great. It was good enough versus expectations. Twitter's been up ever since they reported. And by the way, I think that's the theme for the rest of probably the next 2 earnings seasons, by the way. So the companies that report well and are reasonably valued can do exceedingly well and become the new leaders. Companies that are already overvalued and don't report that great are probably going to continue to go down a lot.
All right, Sean, what to you, though, is reasonable value?
Well, reasonable value isn't something that's more expensive than any time in history except 1999. And so, in fact, I have a perfect example. So some of my subscribers have kind of said, hey, you know, even though you did great on companies like Coop and Twilio and Okta and, you know, a lot of the newer IPOs, US IPOs specifically, you know, why did you sell them so soon? Or why did you get off them before they doubled again? And like in Twilio's case, you know, I caught anywhere from a 2 to a 3x return on it. And yet the stock, I think, went up about 35 more points than my highest sale. Well, the reasoning is because I would have had to value Twilio to the highest valuation stocks have traded at since 99. So it wasn't a late 99 valuation, but it was sort of like an early mid 99 valuation. So let's just say normally a tech stock, high growth tech stock doesn't normally trade much above 11.5 times out year sales. That's sales 2 years out. You know, we're seeing stocks trading at 15, 16, 18, in some cases 21, 22 times out year. Again, haven't seen those valuations since 99. So therefore, I'm never going to value stuff at my top end at a 1999 valuation. So therefore, if I sell something for a triple and it goes up another double, I'm probably going to miss that last double because I'm just not going to. Now, I might catch a little teeny bit of it with covered call writing or trailing stops or something. But, you know, I mean, hey, the first 7% decline, if I have a trailing stop, I'm out. So that's the difference. And by the way, there's very, very little stuff that's valued at that level. But it doesn't take much when, you know, when there's only 8 names leading the market and 4 of them are kind of at 99-ish type valuations. I mean, that's basically kind of what we ran into. And I think that's why some of the recent selling has been so harsh.
Hey, Sean, Dennis, and I completely agree. We actually, right before we came on, we broke down like the top 5 components just in the queues themselves, and it's made up, you know, 50% of 5 stocks. And when you even look at, you know, those individual stocks, I mean, Apple, Microsoft, Amazon, Google, Facebook, we're kind of talking. So it's most of the FANG. You know, we don't have Netflix in there in the queues, but it's still, you know, a chunk of it as well. But I mean, even looking today, Netflix is trading in the red. Amazon is down another 16 points here today. I mean,
good. I hope it goes down 100.
But yeah, Sean showing the love here. But I mean, when these stocks, you know, you look at this and you see a little bounce here in the queues, and you see, you know, your leaders still not showing any leadership at all. It doesn't really make me want to jump out and buy stocks, Sean. Overall, I know you're the contrarian though, so you're probably going to be, you know, looking through and, you know, finding, you know, the deals out there from the tech valuation there. But, you know, just what are your thoughts here overall on the queues themselves? You know, not on individual stocks, but, you know, we've had an ugly sell-off here, and I don't know. I just don't see any, you know, signs that we're due for an imminent bounce here.
Well, I mean, my modus operandi, especially if I were to trade, and I do trade in indices on occasion, especially things like I don't trade the Qs, I trade the QLD, you know, the 2 to 1 levered QQQ. Right. So things, you know, and I'll either short it or long it or whatever. But anyway, so on trades like that, I kind of wait for what is to me a pretty clear technical signal. My technical signals might not be that clear to others who would try to use them, but they're very clear to me. So I mean, something like, I mean, here's just a standard tip. And I know, you know, I bet lots of people have said this, but I bet almost nobody practices it in real life. And I do, and I know some sharp traders that do. But when you get into a steep decline, downturn, where it's easy to call a bottom, but then none of them stick. And so, put it this way, you don't know that the bottom has hit the bottom usually until 1 or 2 weeks after that point. There's just anybody that says they can time bottoms or call bottoms is basically lying. Now, some of us are better at managing them and maneuver them, but one easy tip is just wait for a 3 EMA or a 5 EMA. I like a 5. So a 5-day exponential moving average. When stocks start getting back to where they can trade at or above a 5 EMA off of a sharp decline, by the way, you're still getting good prices. You're not going to get the absolute low, but I doubt you're going to miss a 20 or 30 or 40% move. In fact, a lot of times you'll still get a price that's roughly equivalent to what you would have thought was a crazy low price anyway. And so, but at the same time, I call it the early curl. So you can kind of start seeing an early curl on a chart. By the way, I short stocks the same way. When stocks are going full parabolic to the upside, like those pot stocks, and I did better at shorting the weird crypto names and the AI names actually before than I did the pot stocks. But I'll wait for them to fail at a 5 EMA, sometimes even a 10 EMA. And that's still pretty early. I mean, that's something that just started a big decline. And it just crossed a 5 or a 10 EMA. Believe me, it's got plenty of room left. Same thing. If you have a stock that's been decimated and is down 30 or 40 or 50%, especially one that there's nothing wrong with it, I mean, if you wait for it to retake the 5 EMA, you're just not going to miss that much. And in the odds of getting a successful contrarian buy, I think are a lot higher. I use a lot of other tools, by the way. But that's one easy one that kind of anybody can kind of put in their toolbox.
All right, let's move on here. The big takeover yesterday, IBM going after Red Hat, and we started jousting about that, I believe, on Sunday here. Boy, paying a big premium here for a stock trading at a high PE. I was trying to do some research to see if they went after or had rumors of going after this company years ago here. What do you think about this? It's trading at a discount, and you pointed out to me that it's really not trading at that abnormal of a discount here to the takeout price to meet $20. It's a pretty good percentage of it here. Well, what is this going to cure IBM? Does this make you run out and want to buy IBM?
No, but I would much rather buy IBM than Amazon. But I'll say this: before this deal, I was almost sort of like mini bullish on IBM. So here's how I basically look at this deal. They could have bought Red Hat. And I think I've kind of said this on my public Twitter feed. They could have basically bought Red Hat almost any time between 2005 and 2011. And had IBM bought Red Hat any time, and let's just say they would have paid $10 billion. And now at the time, it would have appeared pretty rich that they'd have paid $10 billion. But at least they would have bought Red Hat while they still had roughly a decade of really good growth. And then again, they would have paid one third less than they're paying right now. I mean, so here's the deal. If this was Apple or Google or CRM or a Facebook or Berkshire Hathaway, this would be a horrid deal. Okay, this would be an absolutely horrid deal because Google buys stuff like YouTube for $1.6 billion and then milks it, makes billions of dollars on it, right? Facebook buys Instagram for $1.1 billion. Berkshire Hathaway bought the railroads for really good prices, 2 decades ago. So this is kind of IBM being IBM. They've done a lot of M&A. I mean, I can't remember. Those other deals I just referenced were home run deals. I literally can't recall a single home run deal IBM's done in my lifetime. They may have done some in the past, but IBM, Hewlett Packard, most companies just aren't great at M&A. They tend to basically do it too late and they overpay. And it's kind of Microsoft has historically done that. They've bought something too late and they've overpaid for it. So I don't know. It's put it this way. It's for IBM, they do need growth. One could argue they desperately need growth. My whole view is for $34 billion, they could have bought a ton of really good stuff. But is it better than them buying their own stock back? Yeah, it probably is. and there is a lot of scale. They can probably leverage this relationship. But my God, the stock, I mean, just look at Red Hat stock. I mean, they probably could have paid 150 and got the deal done. Or they could have just waited another 6 months. And you know, I mean, Red Hat's last 2 quarters have been pretty shaky. I mean, there's, you know, they might have kind of hit terminal growth, meaning they might be clearly now be past their best growth days. In fact, I think they are. So I don't know. It's IBM being IBM. I mean, there's so many other good things they could have bought. But again, I'd probably rather see IBM do this deal than just perpetually buy their stock back. So, you know, for great M&A companies, this would be a hard deal. For IBM, it's probably kind of an average deal.
All right, well, let's talk about some of the companies that maybe aren't past their best growth days. We have Facebook reporting today after the close. We have Apple reporting on Thursday. There's also an Apple event today where they're supposed to announce new iPads or something. I don't really know. So let's start with Facebook here. What are your thoughts heading into this report?
Well, you know, at this point, I mean, I was super bearish on Facebook, you know, 80, 90 points higher. I'm really not anymore. I'm not a buyer of it because I like other stuff better. I have other names I would prefer to be on, but I wouldn't be short Facebook here. In fact, I would be surprised if they don't have a report that's good enough to kind of stop the decline. So I would say at this price, their earnings bar to jump over is pretty reasonable. If I felt like kind of doing an aggressive option trade, I would definitely do one on long side on Facebook, and I might do it, but I really like where I'm set up. I really like how my portfolio is positioned right now with longs and shorts. Sometimes I just don't want to trade because I don't want to mess things up the way I have them set up. But if I was in a trading mode, I would probably take a stab on long side on Facebook. And if the stock were to get down to like the 115 to kind of 130 area, I might start along in Facebook again. And again, I've been very vocal, bearish against FANG. I would say Facebook is one of the 2 best FANG stocks, and it's at this price, it's a lot better price than it was at 200. So again, I think the time to be really bearish on it was kind of when I was really bearish on it, you know, 185 to 220. So at 142 and below, it's better. Again, 125 is probably kind of my. I think it's almost exactly maybe what I said on one of your shows, if not with somebody else, where, hey, if they cut Facebook in half, I think it's relatively reasonable again. But it just is a great company. It just got incredibly overextended on a momentum chart and valuation basis. And you know, you cut it in half, it's pretty reasonable. So I can't say hate Facebook at all. This is once my second largest long back in 2013. So there was a time I really liked this company before. Now, I do think if you're buying Facebook, I'll leave it at this. You can't assume you're buying a 40% grower anymore, though. So
yeah, they've stated that. Yeah, I mean, that's true. I mean, and also the ride back up is not going to be like it was the first time because there's a thing we talk about, a lot of overhead supply in the market. Let's just cover a couple.
There you go.
A couple other stocks here. And Rob Hood is throwing out one that I can honestly say I've never heard of, PAGS, PAGS.
That's a new one to me.
Okay, that's a new one to me. How about AMD? AMD 2-for-1 stocks. Again,
AMD would have been. It's probably. I'm not short AMD here. It's probably still shortable. I can't. I would have no. I don't know. I think the stock would have to go to like 5 before I'd be interested in getting long AMD. I just think there's way better stuff to buy.
Okay, a couple of updates. Finisar trading up 80 cents here, but
that would be an example of something that, you know, again, even good stocks when the Nasdaq goes down 15% are going to get wrecked pretty hard. Yeah, I mean, I like 5G. I like fiber optics. Those are 2 of my themes, and Finisar is one of the fiber optic names I like.
How about Redfin? If that one you're throwing in?
Same. No, that I'm fine. I mean, you know, Redfin is these smaller market cap stocks are, you know, that are more thinly traded can get hit pretty hard in market declines. But you know, this is one when I feel like it's bottomed, I'll probably be a buyer of it. I don't really. I mean, this company is going to be a much bigger company over time. So I'm not really worried about the fundamentals. They are a real estate play, and obviously there's been a lot of kind of negative real estate news, so that's impacted them as well. But I think they're very attractive.
Okay. And just the cloud companies here, man, at HTP and the Cloudera, they had the collaboration and got the pop, and they have just pounded those things since that merger or whatever. A little bit overdone here. What did you take advantage of that pop to sell anything? What were your thoughts on
I
the cloud
didn't
stocks?
sell much of it. I might have sold a little bit, but I kind of believe in those, and I like the deal. Those have been two names that I think at first I started adding to Cloudera, and then once kind of all the premium got sucked out of Hortonworks. So at this point, if to the degree I'm adding to these, I'm adding to Hortonworks. But here, you know what? I'm gonna say something. So remember when there have been times, for example, when I've been like the most bullish person on the world in Twitter, and you know that was a pretty profitable deal. I might say that Cloudera Hortonworks combination is as close to my highest conviction idea that I think I've got now. And I don't do that. I don't play favorites, and I don't say, hey, I'm gonna put most of my money in just one or two ideas. I tend to do 10, 15 things pretty equally. I may like other things more than other things, but I kind of view every trade, it has an equal probability of success, right? Every investment. This is one, I mean, okay, so let's say, what was the premium on Red Hat? You guys probably know it. Was it 50% or 60?
It was like 65.
I mean, fair value on M&A,
62.
Okay, 62. I mean, a reasonable premium on Cloudera Hortonworks, the combo, would probably be something like about 120%. So I literally think this, either name, I mean, let's just assume the merger goes through. At this price, I'm almost wondering if maybe the deal doesn't go through, which probably pops Hortonworks a lot. But I don't know. I think the combined entity is almost like kind of an easy double. Like there are times you think, okay, hey, this thing's an easy winner. I'm going to get 25, 30%. I think this is like an easy 100%. It might be like 3-4 type bagger.
Which one's better, Cloudera or Horton? Or if they don't, if the merger was to fall apart, which one would you like better?
Oh, if the merger doesn't fall apart, I'm going to go with Hortonworks, because Hortonworks was going to be the acquired company, right? Okay. And I think Hortonworks was trading like 21 to 22-ish pre-deal, and it only popped like $2 or $3 on the deal because since it's a merger of equals or a merger of friendlies, there wasn't much premium. But again, Hortonworks has just come off 2 really good quarters. By the way, Cloudera just had a really good quarter. But again, here everybody needs to know this isn't the backdrop of the FANG trade is dying. I mean, and the cloud trade is dying. What's Hortonworks? What's Hortonworks and Cloudera? They're clouds. Companies 100%. So it's not, there's some of these like a Splunk is like part cloud, part non-cloud company, right? Most software companies are not 100% cloud. I mean, Cloudera and Hortonworks are literally 100% cloud, and that stuff has been victimized mightily. So again, I mean, where some people worry about stuff like that, they try to attribute price action to the individual company. I pretty much know 99% of the down move is just market action. So I don't get too shook about stuff like that. I'm also not one to be like, I'm not going to lever up to where a 20% decline, a 20% drawdown margins me out.
Sean, we're going to wrap things up. Sean Udall, CIO of Quantum Trading Strategies, giving us his bullish and his bearish picks here on Benzinga's Pre-Market Prep Show. Thanks a lot, Sean.
Go lower Amazon. Go lower Amazon.
I'll tell you.
It's going lower. It's 15.05, down 33 points since we just talked about it.
I know.
But by the way, let me say one more thing real quick.
Sure.
There's a chance Facebook could mark the bottom. I'll make that call.
Mark the bottom in the market, or
the Facebook report might mark the bottom for the next.
Now, there's no bottom in sight here. The S&P futures are falling. Thanks a lot, Sean. Got this down. Dennis, what did you do? I'm
telling you, we looked under the hood of the Qs. When did I come on? 8:30, 25 minutes ago, and the Qs were up. We lost a full handle. So we looked under the hood at 164.55. And said, hey, there's nothing leading here. We've now given it all back. So there you go. That's pre-market prep, what we can do for you guys. It's all the way down there. Wish I would have held on to the full lag. I liked quite a bit of my stuff because I just didn't see any reason to be long any individual tech stocks, and I held a QQQ short, so it's helped. Wish I would have lagged it all, but that's
Yeah.
always the way. I mean, you know, when you have a good
Yeah.
trade, you always want more. But
Yeah.
anyways, this is
Not good.
unbelievable. I mean,
Not good.
there's no
here.
bounce here. There's no bounce. It looks like we're going to go red. You know, maybe we're going to bounce a little bit there. You know, now we've come in a little bit, but look what's happened. Not only have the Qs have come in, but Amazon's down 37 now. I mean, that's in a free fall. It's 2.5% down here again. It's going to test yesterday's lows here, maybe even in the pre-market. Square, which was trading up about 1% when we started talking about it, is now down 1.75%. I mean, this is incredible movement here, guys. Just looking, you know, at the individual stock moves here, like we just lost 2 points in Square in the last 20 minutes. So
where
there is just so much you know, there's so many people stuck in the same stocks. That's been the biggest issue the whole time. So, you know, that everybody is buying and picking on the same companies, the same tech stocks, all the ETFs, trading the same ones, and they're selling those now. And everybody, it's crowded. Those were all crowded trades. And this is what happens when the trades start to uncrowd. And you're seeing it. So everything with a high beta, everything with we said, you know, for so long, we've said valuation doesn't matter. P's don't matter. Well, you know what, guys? It's come to roost. The PE matters all of a sudden. And that is why you're seeing stocks like Netflix, which cannot catch a bid either. And it's down here again today. You know, if we look 10 trading sessions ago, Netflix reported earnings and traded to 400 in the after hour session. It's now 280. All of a sudden, you know, stocks with P's of 99 and 100 are getting hit hard because why? Because that's what everybody's invested in already. And people are like, whoa, you know, maybe the valuations don't make sense. Well, they didn't make sense before either, but they've been running. Now, when does this trade reverse itself? It's going to have pops. But what's the problem now, Joe? We talk about all the time.
I mean, when it
what's
goes
the problem on all these stocks?
overhead supply.
Overhead supply. Everybody is in these things. The crowded trades, the buy, the dippers are getting ruined on these things. What happens when they pop? You know, back and just like yesterday, you know, right at the end of the day, you can look on Amazon. Had a nice little tidy 40-point rally in the last 25 minutes. It's gone. It's gone in one day. Can't hold it for a day. And that's what we're seeing. It's the same thing again and again. There's just too many people in the same stocks, and they're taking them. They're selling those stocks right now. They're moving in, and it's still rotation. This is why we're not in crisis mode here yet, because they're still rotating around. There's a lot of stocks that were strong yesterday. They're still buying the defensive names, but the market is in full defense mode. It's going to take a catalyst. Maybe we get a deal with China on the tariffs.
Oh yeah,
maybe
you know that
the
tweet
Fed says something that isn't so hawkish. There's going to be a catalyst that turns it around here, but why try to call the bottom on this? Because if you're out there just calling the bottom, eventually somebody gets it right, but it's just BS luck here right now, because who knows where the bottom is. I would say it's more, you know, I'm more inclined again. I've been saying this for 2 weeks now, and since Anne-Marie said it on her show, I think that was almost 2 weeks ago. Selling the rips is the trade, not buying the dips, and that has been working to a charm.
All right, $14.95. That was your low yesterday in Amazon. You're only $7 below that. I had to blow up my dailies here. Not a lot between 1,400 and 1,500. You kind of blew through that area. I'm only going to give you an area where I see at least 2 or 3 lows, and that area, like, I'm not going to give you 1457 because there was only one low there. But I will give you 1430 because you had 1, 2, 3, 4 lows right in that area. So 1430, and then let's just call 1400 a psychological level here. We are, first things first, taking out yesterday's low at 14.95. SPOO's only up 4 now at 47.5. The close, better find some support at the close here. Pre-market low comes in at 36.25. Absolutely nothing down to Monday's low at 26.03. Spencer, anything you want to add? Or Dennis, you have anything you want to add?
I think we're good.
Just looking, I just say caution still, the name of the game. We're going to get a bounce here eventually, though. And you know what? I was looking. Did we talk to pot stocks?
No. You know what?
Let's quickly take 2 minutes to talk these, because some of these are now getting to a level where I almost feel like we're due for a bounce. And I'm looking, you know, at like that ACB, Aurora Cannabis, and this thing, and it's traded on the NYSE now, which is nice. So we can just look at it here. We don't have to look at it in Toronto. $12.30 back the day before legalization. They legalized it, and the thing has been cut more than in half. Now, you're talking about a stock down 60% in 2 weeks. It's getting back to the point of, where this thing was when it's at its lows. So, I mean, stock, I think the market cap's getting down there too now. The valuation actually starts getting even more attractive here. I think it's only trading 55 times. So on a stock, a marijuana stock that's growing. So now maybe some of these things start to make some sense. So, this is one that I'm eyeing. I'm not necessarily coming in here and going to call the bottom buying it, but maybe I put one of these on my shopping list. If you wanted to get some high beta names in your portfolio, you're starting to get the opportunity to do it. But some of these pot stocks have just been absolutely murdered. I mean, the CGC, we're getting back to the point where Constellation bought it. If we go down, we're 32 in the pre-market. When Constellation made the bid for it, it was 26 that day. So you've given it all back. I mean, maybe there is a trade here at these old support levels before anybody got involved. And remember, there could still be some people sniffing around. So I'm actually starting to get interested in potentially buying some of these pot stocks. I don't know if I'm ready to pull the trigger here yet, but they are on the radar.
One that you won't be able to buy is IGC, as it got delisted yesterday.
I get my $2?
You're exceeded.
I don't know if I got my $2 because it got delisted before it got to $2.
You did not get your $2, Dennis.
I didn't get my $2 because they delisted it on me. I was going to get it today. For this affiliate, when it was 12, I gave a $2 price target on this thing within 6 months. It looks like it hit. It was going to hit it 6 weeks.
Dennis, look what you did to the market here.
I did to the market. We looked under the Qs of red. Guys, we were trading 164.55. It helps to look under the hood. We looked under the hood, and the traders who were looking under the hood are getting paid here right now because we gave it all back. Yeah. We gave it all back in 30 minutes before the market even opened. So don't sometimes you just got to analyze the rally and not just take it at face value. And anybody who was taking that QQQ rally at face value wasn't looking at Amazon this morning, which is now down 42. Wasn't looking at Apple, which was barely up, and it's now down $1.25. Wasn't looking, at Microsoft, which is now in the red as well. So, and now the S&Ps have went to the red too. So not saying, but the rips get sold here once again, just as much as they were buying every dip, 6 months ago, they are selling every rip today.
How about one stock I know that's on your radar to buy today is General Electric and trading down.
Single digits is my target. I don't know if we're going to get it today though.
Okay. All right, Spencer, you want to wrap things up and preview Wednesday's show?
Yeah. Could this have anything to do with Trump tweeting about the Fed 10 minutes ago? He said something about the Fed. He said he's been tweeting about the market actually all morning, but he did say something about this. I'll just read the tweet. If the Fed backs off and starts talking a little more dovish, I think we're going to be right back to our. So this is a quote. We'll be right back to our 28 to 2,900 target range that we've had for the S&P.
Oh, he's giving targets now?
No. This is a quote from someone at Wells Fargo that he tweeted. So yeah. Okay. So no, this is not a Trump price target in the market. He's just quoting
Trump
a Wells Fargo.
I love
price
it.
targets now.
No. Okay. If you missed any part of today's show,
we heard it all.
it wasn't.
That's a bad rumor we're starting.
Don't say that's not what he said. If you missed any part of today's show, you can catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, or just watch the show on youtube.com/Benzinga TV. Thanks to our guest, Sean Udall from Quantum Trading Strategies for giving us 20 minutes of his time. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. Please remember that all the information from our show is for informational purposes only and not meant to be investing advice. And on that note, I hope you all have a good day, and we'll see you on Wednesday.